Hello, everybody. Welcome back to another Origin community call for April. We have a lot to get into. We're going to bring up Raphael and Peter from Origin side. A few announcements to get into in a minute here. I see Raphael and Peter have joined. Hey, guys. How are you?
Great. Nice to be here.
Peter, welcome
Doing
in.
well. Thanks for having me.
Yeah, of course. Excited to kick things off for our April community call. We have a lot to get into. KPK is going to be joining us. They're a vault curator on Morpho who helped us launch some new ARM markets, which we'll talk about. But first things first, Raphael was just at DAS NYC, so I wanted to talk a little bit about that. I know you were networking with some funds, some vault curators, and other DeFi partners. So I'm curious how that went.
Yeah, thanks, Ryan. It was great to be there, like especially participating in the Ethereum Foundation event as well, like meeting with a bunch of other builders in this space and seeing like how the DeFi world is changing. I think what I can say that is the most tangible thing for actually for Origin is how some of the how is it changing like in terms of the products and interest what people actually want right now. And I feel like ARM has been like a very interesting product for what it's coming. So what we have been seeing is that like there is a very strong interest of a bunch of like TradFi companies to bring RWAs or they're tokenizing funds and creating like I don't know even reinsurance funds coming in on chain, but they're all looking for a way to provide on-chain liquidity to users, and they don't have atomic liquidity, so it's always asynchronous. So ARM is like a very interesting product for this kind of world, and I think we're very well positioned to bring that and to provide this solution. And behind the scenes, I have been talking to actually a bunch of people who have been interested on actually solving that, and at the same time say, hey, have you seen that we already have like billions of dollars in trading volume with this product? So that number actually makes it like people go like, what? So it's really interesting, right? Like, so I feel like there is a very big potential of a catalytic coming up on this product line. So more to be seen there.
Yeah, that's good to hear about the ARM, especially for Origin's protocol revenue, because as we've seen, it's been contributing a lot of fees to OGN. Even though we have lower TVL in our ARM products than we do in OETH or Super OETH, for every dollar of TVL that's deposited to the ARM, we're earning like almost 2x the protocol fees that we do on OETH or Super OETH because the yield is higher. So definitely a good thing for Origin, and I'm sure it helps to be first to market with that product. I know we've seen some other people try and copy us, but haven't been as successful with that sort of product. So really cool to see that there's interest from other companies and institutions on our ARM products. But we have a lot to get into today. I'll go over a few quick announcements. We'll talk about these more on the call. As I mentioned, we do have some new Morpho markets. KPK will be joining us in just a little bit to talk about the new ARM markets we have. But we also have a new wrapped OUSD market, which Peter will provide some details on in just a few minutes. I know we have an OUSD market on Morpho with Borrow Booster that's been live for a while. So if you're looking to take out high LTV loans against OUSD, the Borrow Booster market would be a good choice. It usually hovers around 0%. Sometimes it's negative. Sometimes it's around 1% on the borrow rate, but one of the cheapest ways to borrow USDC. But if you're looking to leverage loop your yields on OUSD, then this wrapped OUSD market would be a good choice. I think Yearn is the curator on this one, and we have about 750K of initial liquidity. I checked this morning, and the borrow rates are relatively low. I think it's around 3.2% or so, and OUSD is currently yielding around 5%. So there's a spread you can capture there by looping your position if you're interested. If you search by wrapped OUSD on Morpho, there should only be one or two markets, so you should be able to find that pretty easily. We're also going to give some updates on our OETH migration, but that's well underway now. We have, I think it's 27% of our OETH currently staked with compounding validators. I'm not sure what the nominal value is. That might be $17 to $20 million, maybe a little bit more than $20 million so far. But good progress there. A lot of benefits coming with this upgrade that's very unique to Origin Ether. So we'll talk about that more on the call in just a few minutes. Just a couple other quick announcements here. We do have a new DApp UI that went live very recently. So if you haven't checked out the Origin DApp in the past week, definitely do that. There's some new metrics that are visible on the Origin DApp, such as historical APYs and rebase events. There's a new history tab there. We just posted about it this morning. So definitely check that out. We also have a new website. It's been live for a couple of weeks, so you may have seen this already, but a nice clean design at originprotocol.com if you want to check it out, but a nice overhaul. And what's coming next is our analytics. So if you guys like the analytics page, I know a lot of people reference that pretty frequently. It's going to be the next update, so stay tuned for that. And then lastly here, our token holder update for March is posted on our blog. So check that out if you want. A lot of the major announcements will be covered here on the call, but that will go more in depth on some of the things we talk about today. And then lastly, I just want to give a quick update on OGN buybacks and staking. So the total amount of OGN bought back thus far is over 83 million. Which represents 12.5% of the circulating supply. So we continue to see that number tick up. All of the protocol fees that Origin Protocol earns goes towards buying back OGN. So that's why this number continues to increase. And what's pretty interesting is over 23 million OGN has been bought back since the beginning of the year. So we're on track to pretty much double the total amount of OGN bought back this year alone. If you extrapolate out that $23 million or 23 million OGN number, it's about 90 million OGN that we're on pace to buy back throughout the year. And we're seeing a lot of people stake OGN. About half the circulating supply is currently staked to earn those rewards. So also a nice metric to keep tabs on there. All right, that is it for the update on OGN. We're going to get into some new ecosystem integrations and then give updates on some of our larger integrations that have been live for a while that you guys may be using. So I'll toss the mic over to Peter to give some updates on ecosystem integrations.
Thanks, Ryan. I am sharing my screen if you want to flip over to that. Nice, cool. So yeah, this is the wrapped OUSD USDC market, and this is the first market ever to support OUSD over the life of OUSD, which is pretty exciting to say. So with this market, you can use wrapped OUSD as collateral to borrow the USDC at a rate that is currently 3.74%. So that's less than the current OUSD native yield, which means that you can leverage loop using this market to increase the total yield that you would earn with the OUSD. So from the math I did this morning, I think the current OUSD yield is a trailing 5.3%. So if you were to loop this market 3 times at a 75% LTV, you could turn that 5.3 into, I think, just over 8%, which is kind of nice. And then every additional loop you do after that would just mean higher and higher yields. Obviously, you want to make sure you maintain a healthy utilization rate, but the LTV is 91.5, which is about as high as it gets with more full markets, which is kind of nice to see. And there's plenty of available liquidity right now, with $750,000 in capacity. We are working on an IPOR vault that would utilize this market. We will essentially do that loop for you. And what's cool about that is that we'll also have the ability to deleverage that vault if the borrow rate were to move in an unfavorable direction, or if the yield were to drop to an unfavorable number. So that's kind of nice that it'll have that capability. But stay tuned, because that's still a few weeks out, but that is something that we're working on, which will be fun to see live. I won't get too much into these ARM markets that were launched recently, because I know we're going to be discussing that deeper on this call with KPK. But you can now use the STETH ARM LP token and the EETH ARM LP token as collateral to borrow wrapped ETH. The borrow rates are pretty much the same on these two at just under 2%. and the total liquidity is about the same as well, with just over 100K in available borrow capacity. But this is also like the first like real market that you can use the ARM LP token as collateral, which is nice to see after being live for so many months. I think with the current ARM yields, these would be profitable for doing some looping as well, as long as the rate stays generally around the same point. LTVs are decently high as well, with the EtherFi LTV at 86, and I think this other one is at 91, which is again pretty high. But
Yeah, it seems like, Peter, it seems like for these ARM markets, you should be taking tabs on them probably more frequently than like a OETH or OUSD market, since yields like really consistent for OUSD and OETH. But with the ARM, it's fairly volatile. So there's probably like a couple different strategies or different ways to approach this, right? Like you could just loop, and maybe some days you're taking a loss, but other days you're making so much profit that it cancels out and becomes profitable. I know the ARM yields aren't super high right now. It's probably around break even on these two ARM markets. But I mean, if you see that ARM yields are starting to pick up, it might be a good approach to start leverage looping. If the market becomes more volatile, then the ARM yield goes up. And we've seen days where ARM yields on both the ETH and staked ETH ARM have been over 30%. So if you're able to borrow at 2% and leverage that up and earn at 30%, that would be ridiculous. Obviously, that's not a typical day for the ARM. But on average, the ARM does yield, I think it's like 4.2, 4.3% over the past year. It is just more volatile. So if you are planning to use these markets, just keep a closer eye on it, because there are days where the ARM might only earn 1 or 1.5% APY, but then there's days where it'll earn 10, 20% APY. And it's all based on market volatility, right? So if you're not familiar with the ARM, it earns yield by arbitraging staked ETH and EETH. So if they ever fall off peg on those days, it earns a ton of yield. If it's super close to peg, then it gets lent out on Morpho markets to earn a base yield around 1.5%.
Thanks, Ryan. So yeah, to reiterate on what you said earlier, definitely if you're going to leverage loop these markets, pay attention to the ARM yield, because it is quite volatile based on the peg of STETH and the peg of EETH. I think both markets would be profitable to loop right now, based on what I'm seeing. The STETH one wouldn't be very profitable. You'd be pretty close to breaking even with just getting a little bit of profit. The EtherFi one has a little bit more space to do looping. With I think the current yields for this ARM is like 2.6, so there's a bit of space there. But same deal though, it's volatile yield, so just pay attention to your borrow rate and utilization rate.
Yeah, and I'll send out some pings on Discord too, and I'll send out a Twitter post when ARM starts to print again, because these markets will become super interesting to leverage loop on as soon as that happens. So if you don't want to manually check every day, I'll just ping you guys on Discord and on Twitter when the opportunity arises to make a lot from these markets.
I am working on getting an IPOR vault set up for these two markets as well, so that you can essentially do the loop, or they'll do the loop for you, and save on you manually having to do it. Same thing with Contango. I'm working on getting both of these supported there to make the looping easier. So stay tuned on those. Also moving on to the borrow booster markets. I only pulled up one of them, but this one in particular has been very popular to use lately, with the total market size increasing noticeably. But this borrow booster market, where the yield from the OETH is going back to Morpho through Merkle as an incentive to offset the cost of borrowing. This market is supported on Contango right now, so if you wanted to take advantage of the loop there, it is supported there already. I'm sorry, I don't have that up on my screen right now, but if you do decide to do that, it looks a little bit funky because of the borrow rate, but the OETH yield is still coming back to the market, so it should still end up being a positive number for you, at least if it stays negative. like it is right now. I'm also working on utilizing this market within an IPOR carry strategy. So essentially how that would work is ETH would be deposited into this market, then the USDC will be borrowed. The USDC would then go into OUSD to increase the yield, and then also you get the portion of the yield coming from the OETH itself. And so that'll all be wrapped into a single vault where you deposit one token and you would earn yield on that whole strategy. I guess there are several IPOR strategy vaults coming out soon. So stay tuned as we roll those out in the next few weeks.
Peter, do you know if this is the cheapest place to borrow USDC on Morpho right now? I know it has been previously.
I don't know if it's the cheapest. We can check right now, though. Let's see, USDC. Am I in the wrong one right now? Let's see. All right, it's not the cheapest, but it is definitely up there. If I change the network here, maybe make it a little bit easier to see. All right, so top 3 cheapest. I guess some others are putting up incentives that are also offsetting the cost to borrow.
It might not be the most fair comparison, though, right? Because these other markets probably are incentivizing with governance tokens or some other sort of incentives. With OETH, it's consistent. Like it's always been 0%, like at most around 1%, and pretty consistently negative because the staking yield is actually what's being used to offset that borrow rate. So you don't have to worry about us stopping incentives on that market. It's completely programmable yield. So you can go in there and you can borrow USDC and it's fairly consistent, one of the lowest yields. If you were able to take an average over the past year, then I bet that OETH market would be at the top.
Yeah, most likely. And then also like looking at the OETH market compared to the other two that have the even lower rate, there's significantly more size in total liquidity and the total market size compared to the other two. So you can't really compare them as like the same kind of markets because the OETH one is definitely larger. And then there's this big gap before you get to like the next market that has real size, which is pretty cool to see. Gonna go pretty far down before you get to anything like even close.
Yeah, what's the next market that has over $5 million of capacity? I'm curious.
I haven't seen one yet. As I'm going down. Probably this one, maybe this Lido market would probably be like the next biggest one when it comes to capacity. But
okay, and that's 2.5% borrow rate there, as opposed to negative.
Right. That's right. So you are paying to use this market to do I don't know, similar kind of loop, but no, it's definitely cheaper to use the OETH market with the incentives offsetting the cost to borrow. Just cool to see. I'm excited about this next one here. This is Open Cover, which is a crypto insurance company that's been live for a few years now. They just launched this primitive last week, which is like a different style of opting in for insurance for crypto products. Essentially, well, previously with crypto insurance, you had to purchase the insurance separately and then had to select a duration for how long you wanted that insurance to last. And then once that duration was up, you had to purchase it again. But with this new primitive, essentially you just opt in with a wallet that's holding some of in this case, the STE's ARMS LP token. And then Open Cover will take the cost of that insurance out of the ARMS yield that you'd be earning. And that's it. That's really the whole thing. There's no duration to select. You're covered for essentially as long as you're holding the ARM LP token in your wallet. You can see here if I hover over this that it takes out the cost of the insurance pretty much straight from the yield, which is what that net covered APY comes out to. So that's the yield that would be coming directly to you after the cost of the insurance. And you can see that there's 683.32 ETH available in capacity, meaning that's how much they can handle in insurance right now if people start to come in and use this. So if I wanted to take advantage of this, I would just come to this platform, opencover.com/vaults, and come to this platform with a wallet that's holding some of this token. And I would just click this button, and that would be the whole thing. It's very easy. As soon as I was done with the coverage, I would come back and if I wanted to sell the token, I could come back and click end coverage, and that would basically opt me out. But I'm a fan. I like this this style of doing crypto insurance more than the previous styles of it. So yeah, definitely check this out. Maybe we can drop this link somewhere.
Yeah, we did post about this pretty recently too. So if you check out our timeline on Twitter, you can find the link to OpenCover. But yeah, there's definitely a lot more eyes on OpenCover right now in insurance options, given all the exploits that have happened recently. So definitely a solid option for insurance if you want to check it out. I know they've been pushing this with Morpho pretty recently, and now Origin is listed as well. So cool to see. Thank you, Peter.
I think we're still the first ETH product on here, which is fun to see. Moving on to Curve. So on the last Friday of March, we added additional incentives to 5 of the OUSD markets, and those incentives should have hit the market, I think, last Thursday at midnight UTC. But the markets that we added incentives on for the last round are the CRV USD market, and the PM USD market, the AV USD market, the USDE market, and the EUSD market. All of those are on this list. You can see the incentives reflected on this column as emissions. So if you want to take advantage of the emissions, grab both of the tokens and then deposit them into the Curve pool, and then stake your position on staked or convex if you don't want to worry about claiming the emissions yourselves. Or you could head over to Beefy, where I think 6 of these pool booster markets are supported, and they make it a little bit easier, where you can essentially just deposit and they'll do the claiming for you, and we'll redeposit the emissions back into the same pool. So you never really have to worry about it. The nice thing about Beefy is that it also supports zapping, so you can actually they support zapping and they support single token deposits. So you can actually come to these markets with or these vaults with any token, and they'll zap it in to the pool for you. So you never have to worry about getting 2 tokens at once, which is kind of nice. It's very hands-off. I'm a big fan of Beefy. They've been around for a while.
Yeah, this is one of the best options to earn yield with OUSD right now on these curve pools. I'm seeing a lot of them in the double-digit range, 11.7% on the OUSD USDE pool here on Beefy, even higher on the PM USD pool and the Yield Nest pool that we have going on. So take advantage of it while you can. Some good opportunities here on Curve.
Definitely take advantage. It's a great place to earn the yields from the incentives and from the underlying OUSD yield itself. So check it out. Beefy.com is a pretty easy one to remember. But if there are no other questions, I think that's all I've got today, Ryan.
Okay, thank you for those updates. We'll pull up the slides again, get into some product updates. I'll let Raphael take the floor. I know we have some updates to give regarding OETH as well as OUSD.
Thank you, Ryan. I think on the first topic, we're going to talk about OETH. The big update is that is about the validator accounting is becoming more trust minimized, and its staking architecture is becoming more efficient. So the first one is the usage of the EIP 4788, which this EIP it exposes beacon block roots in the EVM, which can then be used to prove consensus layer state. So what does it mean for OETH? OETH uses that to verify validator balances, pending deposits, and exited validators on chain with Merkle proofs. So how is that different, right, for OETH? What does it mean? The practical difference is that OETH removes any type of reliance on third-party Oracle for validator accounting. Instead of waiting for an Oracle report, you can verify the validator state on chain directly. So this is very cool and it's very unique, and we are the first LST and the only LST right now to use this, as far as I know. So it's very exciting to be that right now on Ethereum. And then besides that, we also have the EIP 7251 using on OETH, which makes validator more flexible on operating. Like, so what can we do with that? We can support partial withdrawals. We can top up validator with smaller increments and move capital faster instead of waiting for the full 32 ETH chunks. So this means less ETH idle, quicker redeployment of rewards, and smoother liquidity management. So the interesting part here is that now the rewards are auto-compounding in the validators, and we don't need to wait for the sweep cycles anymore. So this is very interesting. As of today, I think, as what like Ryan was saying before, we migrated more than 40% of the staked ETH that we have to compounding validators, and we're expecting to complete this by the end of Q2 or in between Q2. You can track this on our analytics page where it shows the compounding validator strategy. The next slide, please. You want to say something, Ryan, on this?
No, I think you covered it all. I know we've been giving updates on the OETH migration now for a few months. It's a long process because the deposit queues for the Beacon chain are quite long right now. But it's good to see that progress, and it's really cool that we're pushing forward on some of these new EIPs that haven't really been built on that much yet. So cool to see Origin is one of the do that.
Yeah, I think for those listening, like that has not been inside the team, like the initial idea was that we were not even gonna launch a compounding validator strategy. We would just unstake and stake it again to reduce the scope. But then like the queues got all messed up, so we kind of needed to act on this. Costed us like some audits, but it's okay. Anyway, let's talk about OUSD, right? I think OUSD again is that always our simple super peach where users hold OUSD and the yield compounds directly in their wallet. And right now we have been our 30 days average has been 5.1% APY, which is very good. And I think like what is interesting right now to see is us enabling more markets and allocations. So right now we have been allocating across some markets on Ethereum and Base, like mostly only on blue chips and what we consider very low risk assets. And with our new update right now, which is not an update, it's just an add-in, like a strategy, we're adding Hyperliquid, which is a very interesting environment. So we're using the W-Hype USDC market and K-Hype USDC market to deploy USDC. So these markets give like a very nice APY. And right now we're actually generating APY from Hyperliquid, Base, and Ethereum. So you as a OUSD holder, you get the best yield cross-chain from the Morpho instances on Ethereum without doing any work, which is really cool, right? And I think what's next for OUSD is what Peter was saying. Like Peter shared some alpha there, which has been that wrapped OUSD market with USDC. So people can already go in there. But we are actually going to start working with iPower to give some looping strategies to automate all of that work for you. So I think this is it for me if there is no questions.
Okay, thank you for those updates, Raphael, and good to see the progress on OUSD, and excited to see what comes with those Morpho markets. It's cool we have a high LTV there at like 91.5%. I'm not sure if it gets much higher than that, but it makes sense, especially paired with USDC, because OUSD is 100% backed by USDC. So very nice pair to check out on Morpho. But let's get into the guest spotlight section. KPK is joining us. Jerry the Kid is jumping on. Hey, Jerry, how are you?
Hey guys, hey everybody.
Hey, thanks for joining us.
Doing well, thank God.
Earlier on in the call, but if you're just joining, KPK has curated some markets for us. We have new ARM markets on Morpho that are quite interesting. But before we get into those, I wanted to hand the mic over to Jerry. He's going to talk a bit about KPK, what they do, and some more details on the company. So Ziad, if you can go over to the next slide, I'll let Jerry take the floor.
Yeah, thanks for that, Ryan. Jerry the Kid, and everybody calls me Jerry. I've been working with KPK for over 2 years now. And so for anybody here who doesn't know about KPK, I'll give a brief background. Basically, we've been funded in 2020, so we've been in DeFi for over 6 years now, and initially managing DAO treasuries, essentially in a non-custodial manner, being able to manage DAO treasuries, leading DAOs who basically have large on-chain treasuries, and we've been managing it for them, and now we've expanded into publicly accessible yield products, mainly vaults and funds. So vaults and curated vaults is anything you'll see on a UI like Morpho or Gearbox or Euler. We're curating vaults on their platforms right now, which is essentially what you see when you supply assets to curators who then allocate them for you into these lending protocols markets, as well as funds. So essentially 4626 vaults we're deploying with our own infrastructure. So that's basically it. That's basically the recap of KPK and what we're doing today. And our track record, basically. We can jump to the next slide. We'll go over what we're interested in for this meeting. So focusing on our curated vaults and our curation approach. So to give everybody an overview of how we work in curation. Basically 2 pillars from the risk perspective. How we manage risk is due diligence. We do thorough due diligence on the collateral we're willing to onboard into our vaults, so the exposure that we're willing to onboard. Tiering is also part of that. How confident we are with allocating assets into those collaterals, how much risk we want to take on for each one of the collaterals we onboard. And then monitoring and execution is all about setting up the circuit breakers to automatically be able to withdraw on any malicious or exploit event that occurs on chain. And then everything that has to do with market configuration, everything that has to do with the oracles, the LTVs, all of those parameters which we fine tune. For example, for the ARM markets we've recently onboarded, which we'll get into now. And then yield generation. So we really minimize manual execution in general. We were trying to optimize for performance as well as withdrawal liquidity, which is super important. So atomic withdrawal. So anybody who supplies on our vaults can atomically get out in one transaction. And also one thing which isn't written down, but also a good mention is to have the allocation avoid kinking underlying market. So that's when the yield spikes, the borrow cost spikes, and trying to avoid those scenarios basically. So yeah, if you go to the next slide, basically we'll focus on the two ARM markets we've recently listed into our ETH yield vault. So actually, I didn't know how deep into technicalities I was supposed to get on this call, but honestly, Ryan and Pete killed it on going over the main risks and you know how to navigate through these markets. So yeah, essentially in both markets, there are days where you're going to see the market not be as volatile and thus the ARM and APY drop below your borrow cost. And that's going to be an unprofitable day, but or you're going to see the borrow cost spike due to utilization in the market, and basically your costs going over your profit APY. Again, having an unprofitable day. But again, as Ryan said, and one of the main reasons I think we've pushed to onboard these the ARM as collaterals on our vault is in a yearly average. We're confident these are great products who overperform and are essentially great collateral to leverage Loop and at the end of a calendar year have a net profit on. So just to recap, they're pretty similar. Both of them are set up with fundamental oracles. That means that the price is derived from the exchange rate from the ARM contracts themselves. And the only difference, honestly, is the LTV. So the Lido ARM has a higher loan to value, which essentially for you guys means that you can theoretically allows you to loop up to almost 11x leverage using the state ETH ARM, and the ETH closer to 7x leverage. In my opinion, always to stay safe, especially for people who aren't used to leverage looping. Starting off with a couple loops is always safer, and being able to, as the guy said, monitoring your health factor closely until you get to a range where you're comfortable with. But essentially, you could use these ARM products as collateral to bump up your net APY closer to a 4 to 5% APY than the current vanilla ARM yields. So yeah, that's kind of why we're here on our side from KPK Curation to say hi, and we're super bullish on both ARM products and think there's great collateral to Loop.
Thanks, Jerry. Yeah, I'm curious your take on where these markets will go long term as far as utilization rates go. Do you think that protocols will be setting up automations to maybe loop ARM yields when the yield starts to increase? Because I think that this is probably going to be pretty volatile since these markets are fairly nascent. Like these were just launched a couple weeks ago now. So I think people will probably start looping once ARM yields start to increase. And then I'm not sure where it goes from there. Do you think it's going to be more automations where there's a lot of opportunistic LPs that enter in and then exit out, kind of actively manage positions? Or do you think, over the long term, people will see that the ARM is generating, right now it's been historically 1.5x the liquid staking rate, around 4% APY, and they'll be willing to take a hit on some days when yield is lower, just so they don't miss out on those really high APY days. Seems like it would be kind of hard to predict exactly when the ARM is going to yield super high, but maybe there's automations that could be set in place to do something like that.
Yeah, exactly. I was about to say, I think forecasting the ARM performance is the same thing. It's as hard as trying to forecast ETH volatility. But what we can work on is stabilizing the borrow cost, essentially trying to avoid LPs opportunistically kinking the borrow rate. And honestly, that's a matter of I think as seeing the markets grow over time and having a lot of liquidity available. So it's easier to have these markets be stable. And yeah, so in the future, I do see other curators tapping into supplying ETH and using these markets as well as us.
Yeah, I'm definitely excited to see how it plays out. It's one of my favorite aspects of the ARM is how it generates yield. It's very different than most DeFi products. So getting integrations like this on Morpho, where you can loop when ETH becomes volatile and start printing some really high returns is pretty interesting. I was pretty excited for Pendle as well, because it's a very different use case where you're essentially just betting on the staked ETH or ETH peg. And if you think there's going to be volatility, then the ARM would increase its yield. So really unique integrations here with Morpho. All right, Jerry, did you have any more slides, or was this the last one here?
I think that's the last one, yeah, from our side.
Okay. Well, thanks so much for joining us, Jerry. Definitely check out these markets. We have one for the ETH ARM as well as the staked ETH ARM. I think we just added more liquidity today or yesterday, very recently. So there is some capacity, and stay tuned to Twitter and Discord. We'll definitely be talking more about this opportunity as ARM yields start to increase again. But thank you all for joining the April community call. We will be back next month. If you want to dive into more details on any of the updates we talked about, go over to originprotocol.com/blog and check out our token holder update. Until next time, thanks, Jerry.
Thank you,
Thanks,
Ryan.
everybody. Take care. Stay
Thanks,
safe.
Jerry.